Hello and welcome to the Global View. On this Monday, I'm Andrew Gagan. Thanks for joining us here at Ausbiz as we get this new trading week underway. Well, let's see how we finished on Friday globally. Now, President Trump's nomination of Kevin Warsh to become the new chair of the Federal Reserve has upended markets, with precious metal prices plummeting, the US dollar recovering and equities fading. Kevin Warsh, who is a former Fed governor, is perceived as a hawkish pick, certainly compared with the other potential nominees. That, combined with mixed tech earnings and lingering inflation pressure, as well as some uncertainty about a potential government shutdown in the US, saw stocks on Wall Street end lower on Friday, with the small cap Russell 2000 index the hardest hit. They're down close to 1.6%. Now, for the week, the S&P 500 rose 0.33%, the Dow fell 0.4%, and the Nasdaq was off around 0.1%. Stocks, specifically Apple, wrapped up the week with a forecast of higher than expected revenue growth, up 16% for the March quarter, but warned that rising memory chip prices had begun to pressure profitability. Microsoft added to the losses on Friday after falling 10% the previous session, after its cloud revenue failed to impress, while Meta shares closed around 3% lower. Tesla shares rebounded, providing the S&P with its biggest boost after reports that SpaceX is exploring deals with the EV maker and other companies run by Elon Musk. Shares in Verizon Communications soared after it forecast annual profit and free cash flow above market expectations. SanDisk shares, they rallied after a better than expected third quarter profit forecast. And KLA Corp, it tumbled even after the company beat expectations for second quarter profit and revenue. In the energy sector, ExxonMobil beat Wall Street targets in the fourth quarter earnings, while Chevron's fourth quarter profits fell but came in ahead of estimates as it focused on cutting costs. And the S&P's materials index led declines as US-listed gold and silver miners tumbled in response to the massive sell-off in gold and silver prices. Well, President Trump has chosen former Federal Reserve Governor Kevin Warsh to head the US Central Bank when Jerome Powell's term ends in May. His nomination prompted investors to reassess the outlook for policy support in the Treasury market, pressuring longer-dated yields higher, and Warsh has called for a regime change at the Fed and is expected to seek less quantitative easing. Upon making the announcement, President Trump said it would be inappropriate to ask him whether he would cut interest rates, but said he was confident Warsh was inclined to lower borrowing costs. Well, the nomination came as data showed US producer prices increased by the most in 5 months in December. Amid some pass-through from import tariffs, the producer price index up 0.5% in December after an unrevised 0.2% gain the previous month. US longer-dated Treasury bond prices dipped following the nomination of Kevin Warsh, who is perceived as bearish for bonds given his preference for a smaller Fed balance sheet. The yield on the US 10-year was close to 4.24%, the 2-year there at 3.52%. Australian 3-year government bond yields have fallen to 4.25%, the 10-year at 4.82%. Markets pricing in a 70% chance the RBA cash rate will be increased by 25 basis points at tomorrow's policy meeting, with a total of around 2 hikes this year. And the US dollar index rose around 1% following President Trump's Fed nomination. The Aussie, it's taken a tumble, now at 69.5 US cents. Well, gold registered its biggest daily loss since 1983 on Friday as the US dollar strengthened after President Trump announced his choice for Fed chair, while silver saw its worst day on record. An appreciating US dollar, expectations for real yields amid perceived diminished risk are thought to have triggered profit-taking among the precious metals. Gold down around 10%, currently trading at around $4,860 an ounce, and silver registering its largest fall in history, down close to 30%, at now currently trading at about $84 an ounce. And copper's up close to 5%, iron ore down around 1% to 105 US a tonne. Oil prices are steady to be near 6-month highs, supported by tensions between the US and Iran. Brent crude futures at $70 a barrel, and Bitcoin has fallen further, currently trading at around 77,000 US dollars. All right, let's get across all those market moves, certainly globally. Matthew Goodson joining us from Salt Funds Management in Auckland. Matthew, welcome back. So let's start with what we saw more at a global level there, particularly in the wake of that announcement from President Trump in regards to Kevin Warsh as the nominee for Fed chair. But it seemed to be much more than just that. Obviously, some concerns also about accelerating inflation in the US. Were they essentially the basis, the catalyst that saw a massive sell-off in precious metals?
Yeah, I think that was clearly the case. The latter stages of his metals boom has really been quite something to behold. Uh, Very significant speculative flows that were, dwarfing the size of the physical markets really. So when you have the catalyst of a couple of things, Walsh's nomination, and I think the general expectation is that he is very opposed to QE. He's in favour of shrinking the Fed balance sheet, and as an offset to that, seeing lower short-term interest rates appears to be the plan. Now, his nomination could still well be held up in the Senate for quite some time, unless the investigation of Governor Powell is dropped. At the same time, there was a core PPI number in the US of 0.7, way above expectations, which suggests the impact of tariffs is finally feeding through to the real economy there.
What are your expectations are we likely to see those precious metals come under further pressure? Do you think it's going to be interesting, obviously, when we open here locally, just to see, obviously, the reaction in terms of those gold and silver miners as well?
Yeah, sure. The interesting thing we had noticed going back a few days ago is many of the Australian listed gold stocks had stopped responding to the near vertical ascent of the gold price. It's not to say, however, they won't come under pressure. They did on Friday afternoon as these price falls started to occur in global markets, and they'll clearly come under pressure again today. Where to from here? Look, when you have these vast speculative flows, which dwarf the size of the actual physical traded markets, it really is anyone's guess. We're dealing in the realms of speculation and clearly some forms of forced liquidation. So what we'll see now, I suspect, is margin requirements will be lifted, which will create more forced selling in precious metal markets.
Now, Matthew, the other thing to watch this week, central bank moves. Look, obviously on this side of the ditch, we've got the RBA revealing its policy decision tomorrow. Markets pricing at around a 70% chance that rates will be lifted. Interesting to see also what's going on your side there, and perhaps thoughts that the Reserve Bank of New Zealand has actually cut too hard.
Yeah, that's right. Look, ever since COVID, our central banks had a history of overreacting on both sides of the ledger. And I think cutting as far as 2.25% last year, well below the RBA's current 3.6, was perhaps a little surprising at the time. And inflation pressure here, while it is slowly dwindling, it is only doing so very slowly. With the CPI numbers that were released during January, headline CPI still 3.1% year on year. CPI ex food and oil still 2.5% year on year versus our 1 to 3 target range. So there is now some thought that perhaps the RBNZ may have to raise this year. And certainly a couple of business and consumer confidence surveys during the month also show that inflation expectations, while not rampant, certainly haven't been quashed, and we aren't back to the sort of levels that would be more consistent with the midpoint of that target band. So it's just something that's started to really be priced by our equity market. And so property stocks, for example, had quite a weak month in January in New Zealand.
In particular, so you point out retirement villages stocks, those have come under pressure.
Yeah, there had been a lot of, hope that after 2 very weak years for our housing markets, and hence the retirement village stocks, that this would be a somewhat better year. But I think there's still very little sign of a real rebound in transactions or house prices across New Zealand. So I think some of those hopes for the retirement village stocks are going to have to be pushed back to 2027.
Now, Matthew, on this side, earnings season just getting underway. What are you looking forward to when you get going with the results?
We have had a surprisingly quiet January. January is always quiet, but there have been very little pre-warnings or pre-upgrades from our market. Just a couple of updates from a couple of smaller cap stocks, Michael Hill and Colonial Motors, that were actually quite positive in terms of where they showed the economy trending, but no other updates from anybody else. So Hopefully it will be a results season where companies on average deliver at least in-line results, which would be the first time in a while, and particularly looking for outlook comments for better times ahead for what's been a pretty tough economy over the last 12, 18 months.
Matthew, great to get across what you're seeing from your side of the ditch. Thanks for joining us from Salt Funds Management. Enjoy your week.
Pleasure. You too.
So let's then focus on how we're going to start locally. We are expecting a lower beginning there. As you can see, SPI futures off around 0.7%, reflecting on what we saw on global markets where they left off on Friday. Now, clearly, given those moves in precious metals, all eyes will be on, well, particularly the gold stocks here, given we don't have many listed silver players, but given the great appreciation we've seen among the gold stocks, they are going to certainly be under tremendous pressure today. We'll get right across it in just a couple of minutes when we get going with the open. Stay with us.